Are you interested in learning on how you can receive $20,000 or more for your small business and not have to pay it back? That's going to be the topic of this video. And don't worry, this is not spam or clickbait or anything like that. This is a legit program. It's called the Paycheck Protection Program. If this is new to you, it recently got revised in March, and now it may be accessible to you, whereas before it wasn't. And when I say March, I mean March of 2021. So again, we're going to be talking about the Paycheck Protection Program, and I'll refer to as PPP pretty much here on out, and the changes that took place in March, and I'll be providing an overview. So I'll be answering a number of questions. I do have some notes prepared in front of me, and so you may see me stare at those notes from time to time, but I'm going to answer questions like, what is PPP and what is it designed to do? You know, how does it work, right? Who qualifies for PPP? How is the program facilitated? I mean, like, where do you apply for it? What is the difference between first draw PPP loans and second draw PPP loans? A few more questions I'm going to answer, such as what does applying look like when you're a sole proprietor or independent contractor versus being taxed as an S Corp or a C Corp? How much can you really receive, right? Things to be mindful of once you receive the funds. How PPP and unemployment can actually work together, and some of the deadlines that you need to be aware of. So if this is your first time watching, my name is Navi Miraj. I'm a CPA who mainly helps real estate professionals, that's real estate agents and brokers around the country, save thousands of dollars in taxes. But this video is for any small business, so stay tuned. So I'm gonna jump right into the questions. And so the first question was, what is PPP and what is it designed to do? So if you think about the name, PPP stands for Paycheck Protection Program. So what it's designed to do is to keep people employed. So if you're a sole proprietor, meaning you have a business but you work for yourself, right? You don't have employees, it's just you, then you're keeping yourself employed. In other words, it will provide you with money and for you to pay yourself so you can pay your household expenses, right? The same sort of income that you had prior to the pandemic, they want you to continue to have that during the pandemic. So that's sort of how it works. It also works in a similar fashion if you're not a sole proprietor and you maybe be taxed as an S corporation or a C corporation. It works for your employees as well. And I'm going to explain this a little bit further. So how does it work? All right. So PPP is a loan, okay? And you are going to apply for a loan, and we'll get into the figures, just how much you can apply for here in a moment. But you're going to apply for a loan. Once you're approved for this loan, the loan funds will go into your bank account. You then need to use the funds within an 8 or 24-week period on payroll. So again, if you're a sole proprietor, you're just paying for the stuff within your business and you're using those funds and paying yourself. If you're an S Corp, then you want to make sure that you're using those funds to pay your employees, even if that employee is you. Then you apply for forgiveness, and the loan is forgiven. So you don't have to pay that loan back, right? Normally I am pretty much debt averse, but this is a little bit different scenario, right? I've never seen anything like this before. So you'll apply for a loan, you'll get it forgiven. Not only will you get the loan forgiven, but you don't even have to pay income tax on the loan proceeds that you received and got forgiven. So that's how the loan works, right? You get $20,000 or more, right? The amount you apply for is different for each one of you, but you'll get 20 grand in this example. You'll have it for a few weeks. You'll use it on payroll expenses. You'll show the bank, hey, I use this for payroll expenses by providing a loan forgiveness application, and then you don't have to pay the money back, right? Your loan will be forgiven and you don't pay income tax. So that's an overview of how the program works. So do you qualify, right? Who qualifies for the Paycheck Protection Program? Well, if you are an independent contractor or you're self-employed or you're a sole proprietor, all three of those types of folks file their taxes on a Schedule C. And I happen to have one in front of me. So that means your tax form looks like this. When you file your tax return, it looks like this. It's a Schedule C in the top left-hand corner. And so if you're an independent contractor, how do you know, are you an independent contractor? Well, at the end of the tax year, you typically receive what's called a 1099. In 2019, that form would have been called a 1099 miscellaneous, MISC. In 2020, they changed the form a little bit. It's called a 1099 NEC, which stands for rather non-employee compensation. All right. So if you're any of those, you qualify. If you're an S Corp, if you're taxed as an S Corp, that is, so you have maybe an LLC taxed as an S Corp, or if you're a C Corporation or you have a partnership, you also qualify. The main rule is that you've been in business on or before February 15th, 2020, right? Because theoretically, the idea behind that date is the pandemic, although it would have affected your business, you have no way of proving how it affected your business if you weren't in business prior to February 15th, 2020, right? You don't have historical data to sort of show, hey, I had a business, this was my revenue, and now I've been hit by the pandemic, right? So the requirements are that you have a small business and you've been in business on or before February 15th, 2020, and that you are still in business and you've not sort of permanently closed down as of the time that you're applying for the PPP loan. So the next question was, how is the program facilitated? So what I mean by that is, although it's a program sort of administered, maybe that's not the right word, but set up by the Small Business Administration, the SBA, and they're providing all the guidelines and instructions, you don't actually apply directly to the SBA. You're gonna apply at your bank, all right? So if you have a business account already, you'll probably apply at that bank, and you can do so online. But if you don't have a bank, or let's say you were a sole proprietor, and I hate to say it this way, but you kind of were a little bit sloppy with your finances, so you mixed personal and business. Well then, if you think about it, it's tough to apply at the bank because the bank is using online banking for you to apply. And so when you log in to the online banking system, it's going to be like, hey, like you don't have a business account, so you can't apply for this. So what you'll have to do in that situation is probably apply at another type of institution, like a credit union is a great place to get one of these loans, or what's called a fintech company. A fintech means like financial tech company, and so that might be like a PayPal or like a Blue Vine. It's like an online only presence. They're not a traditional bank, but they are taking PPP applications. So I don't think you're stuck using the bank that you use for your everyday banking. In other words, you're just not applying directly through the SBA, right? It's going to be facilitated through, as I said earlier, a bank, a credit union, or one of these fintech companies that are online. All right, so what's the difference? You might have heard this, right? What's the difference between a first draw loan and a second draw loan? So if you're hearing about PPP for the first time, you might not have even known what this is, right? So what I mean by this is there was an opportunity to apply earlier, and if you didn't apply earlier, you still can. You're still going to be considered a first draw loan. But if you had a first draw loan, you use the funds, you may or may not have gotten forgiveness already, and you still need more money, you're still hurting, then you can apply for the second draw loan. But in order for you to apply for the second draw, you must have gotten the first draw, been approved, received the funds, and are using them, or in the process of using them, right? Or maybe even use them all up. How the second draw loan is different than the first one is every pretty much way that you apply for the second draw is the same as the first draw. And the only difference though really is that the second draw gets a little bit more picky. What I mean by this is you must be able to demonstrate that you had at least a 25% reduction in gross revenue through comparable quarters from 2019 to 2020. I know that was a mouthful. Maybe I can whiteboard it since I do have the whiteboard behind me. So I'm saying to qualify for the second draw loan, right? This would probably never happen in real life, but let's say you have 4 quarters in a year, right? Q1, Q3, Q4. And in 2019, you happen to make $10,000 in revenue each quarter. That's just how the math worked out. You're the perfect business. You made $40,000 for the year, 10K a quarter. Well, to receive the second draw loan, you're going to have to show a reduction in the same quarter of the following year, right? Sorry, that's my Q. So this is 2020. This is 2019, right? So if you had 10K in revenue here, then you got to show that you're at 7,500 or less when you compare these 2 quarters, right? And the same thing sort of applies. So that's how it works with the second draw loan. All the requirements are the same, and what I mean by that, it's very easy to qualify and get. But when you do the second draw loan, they add this little qualifier, meaning, hey, we want to make sure your business was really hurting. We're not just going to sort of take your word for it. And so they're going to make you provide these documentation, right? And the average small business should have this, meaning you should be on like QuickBooks or some other accounting software so you can actually see your monthly profit and loss statements. But if you kind of just work things through a spreadsheet, that's going to be a little bit more challenging. You're probably going to have to compile something and create it so that you can show it to the bank when you apply, right? So that's the difference between first draw and second draw loans. All right, so stay tuned. I know I'm covering a lot here, but in a moment I'm going to talk about like how much you can actually get and how that math works and everything. So let's talk about applying as a sole proprietor, an independent contractor, or self-employed versus being taxed as an S Corp or C Corp. How does the application a little bit different? And so let's use the whiteboard again here. So if you are one of those things I mentioned a moment ago, I shouldn't say things, what I should say is if you're an independent contractor or self-employed or a sole proprietorship, then you're going to apply a little bit differently. The formula is different on how much you can qualify for. So if you are any of those 3 things, again, independent contractor, sole proprietor, that means you file your taxes on Schedule C, as I mentioned at the intro of the video. And so what's really great about this new revision that they just did, I believe March 3rd of 2021, is you now qualify based on the gross income of your business, which is line 7 of your Schedule C. Why is that a big deal? That's a huge deal, really, because prior to that, you applied using the net profit, which means that you had revenue, you had expenses, and whatever's left over is what you use to sort of come up with how much you can apply for. But now you're using the top line number, the revenue number. So let's do this by way of an example, right? I'm saying you had a small business, right? All you earned, I shouldn't say all, but what you earned is $48,000, okay? That was your revenue number, line 7 of your Schedule C. Well, how the math works is you got to divide this number by 12, right? So if you do that math, you're going to get $12,000. Then you multiply this number by 2.5. And that 2.5 represents months, 2.5 months, right? So this is 48,000, a year's worth of revenue divided by 12 months. So revenue divided by each month, so 12,000. Sorry, this is not 12,000. This is 4,000, right? $4,000, right? And then you multiply that by 2.5, right? So 48,000 in revenue divided by 12 is $4,000 a month in revenue. Multiplied by 2.5, that's $10,000 that you would be applying for under the new revisions of the PPP loan. Now, if you're hearing about PPP for the first time, then this sounds fantastic, right? If you applied back, several months ago before they had this revision, let me show you how this is so great, because before what you had to do is basically say, okay, Navi, I had $48,000 in revenue, but I also had, $36,000 in expenses because I had, advertising expense and, social media ads, rent, all these different expenses that you would normally have. Hiring your children as a strategy, mileage, home office, all that stuff. So you were left with $12,000 in profit. Then that's where you'd be starting out with. So then you would have to divide this by 12 to get 1,000. Then you multiply that by the 2.5 months, just like you did here. And you would get, I think, what is this, $4,000? No, this is, my math is terrible today. This is what, $2,500? So that's sort of how the math works. Don't make fun of me if my math is wrong. I'm doing it on the fly. So that's how you apply for it if you are a Schedule C filer. How do you apply for it if you are an S corporation or a C corporation? Well, if you're taxed as an S corporation, Well, let me back up a second. When you're a sole proprietor, which is this example here, you're going to be treating yourself as an employee. Technically, you're not an employee, but the way the program works is you're going to count like this formula as yourself. That's how you will calculate your PPP amount. But if you're a sole proprietor and you also have employees, then the amount increases. You can actually get more than this because this is the calculation for what you would get as the business owner. And then there's another calculation for what you would get for your actual employees that you had on payroll, okay? Now, if you're an S corporation, that means you file tax form 1120S, or if you're a C corporation, you file tax form 1120. Then the way the math works is basically the same. It's similar, but you're not using gross revenue. They don't let you get away with that. You've got to prove what your payroll expenses are. Sorry, my whiteboard's on this stand, and the stand's not very stable, so I'm doing the best I can here to keep things from falling over. So what I'm saying is, if you're an S Corp or a C Corp, then you've got to go by what your actual payroll expenses are. So you take your average monthly payroll expense, even if you, the business owner, are the only one on payroll, you take your average monthly payroll expense, you multiply that by 2.5, and you get the amount you can apply for. So let's say you're the only business owner and you pay yourself $60,000 in payroll and salary for your S Corp, right? You divide this by 12 once again, and you get $5,000. And then you take this number and you multiply by 2.5, right? So then you're gonna get 12.5. So this is how an S Corp would get it. It's the amount you paid yourself if you're the owner and you're the employee shareholder. This is the amount of money you paid yourself in salary, so you can get $12,500. Now, the S Corp also works in a way where if you have other employees, so let's say you're the S Corp owner, you're on payroll, and then you also have other employees that are on payroll, right? Then you can get even more. You're gonna take this and add it to whatever you paid the rest of the employees as well, and you'll get even more money. But you must be able to prove that you were on actual payroll. And the way you do that is either by providing bank statements. You may have to provide like third-party payroll service reports. So like if you use Intuit Payroll or Gusto or any of those other payroll companies, they can provide you with the reports that you're gonna need. They may even ask you to file, if you don't use a payroll company, they might ask you for the tax forms for payroll, like the 941, which is your quarterly report, or even your state equivalent form. So I know I'm getting a little bit technical there, but the main takeaway that you should have with the S Corporation or the C Corporation is you need it to be on payroll. In other words, if you didn't pay yourself properly and all you did was take distributions, like you just transferred money from business checking and you threw it in your personal account, and you didn't pay your payroll taxes, well then you don't qualify. I'm sorry. You should have been paying yourself properly this whole time. All right, next. Things to be mindful of once you receive the funds. Once you receive the funds, you need to make sure that you use at least 60% of those funds for payroll expenses. That's very easy to do when you're a sole proprietor, right? Because when you're a sole proprietor and you receive those funds, you basically are just paying for your business expenses and paying yourself. So there's not gonna ask much in the way of proof of that. But when you are an S Corp or a C Corp, then basically they're gonna wanna see that of the funds you received, right, of the $12,500 you received, that at least 60% of that number was used to keep you on payroll, and you can show that you had payroll expenses for the period, for the 8-week or 24-week period after you received the funds. Again, this is supposed to be an overview video, so I'm not trying to get into all those itty-bitty details. The other 40% can be used for things like mortgage interest or rent or PPE, not to be confused with PPP, and other sort of operational cost, all right? So the next question is, you might find this one really interesting. So how does PPP and unemployment work together, or can it work together? So you're not supposed to be collecting unemployment and have received a PPP loan at the same time, but you can if you do those at different times. So let's say at the beginning of the pandemic, you applied for unemployment insurance, and there's no revenue coming into your business, so you're receiving unemployment from the state and the Fed. And now business has picked up and you stopped collecting the unemployment. Well, now that you've stopped, you can apply for PPP and receive PPP funds. You just can't receive PPP funds and also be on unemployment at the same time. Because think about it. Remember at the beginning of the video, I said the purpose of PPP was to keep you employed. And if you're using those monies to keep you employed, then you shouldn't be collecting unemployment, right? Because you can't be unemployed and employed at the same time, right? So it just makes sense if you think about it from that perspective. All right, number 9, my 9th question was, what are the deadlines to be aware of? Well, there's this crazy deadline of March 31st of 2021. But if you think about it, they just revised their application on March 3rd of the same month. So they really didn't give people the chance to apply for this revised loan amount. So my thought is that they're gonna extend the PPP deadline much further. I don't know until when, maybe September, maybe the end of the year. But regardless, you should be putting together your documentation based on the instruction you received on this video. And what I'll do is I'll post in the description below the links, if you're watching on YouTube, that is, the links to the SBA website where you can get more information, the frequently asked questions by the SBA, and maybe the Schedule C form that I was showing you earlier. Now, keep in mind, if you're like, Navi, that's great, I learned about these new programs, but my bank, they're saying like, hey, we're not ready for this, we're not taking these applications. Keep in mind that in their eyes, the program expires March 31st. They don't want to take your application and then be responsible for you not getting the funds, right? So what I'm trying to say here is give them time. Once the program is extended, I'm sure they're gonna revise their statements about not taking any more applications. And also consider that they're updating their software. So when you go to apply online, they've got to get their software configured so that they can have you apply with these new revisions that were just put, or I shouldn't say put in place, but just announced on March 3rd, right? So try to be patient with the banks. I know dealing with the banks isn't always fun. So coming up here shortly, if you're watching on YouTube, will be a video specific to Schedule C filers. That was the independent contractors and sole proprietors and self-employed folks. That talks about the changes to the first draw PPP application. So do watch that one. It might be helpful. I go into a little bit more detail. Please do also share this video with a friend or business owner who needs some help and their business is really hurting and they could use these PPP funds, because I'm telling you, a month ago, they didn't qualify, or if they did, it was for a small amount, so they may not have tried. But now, again, it's on the gross income number and not the net income number. So that's all I got for you guys. Those was the Q&A. Don't forget to hit that subscribe button, and I'll see you in the next video.